Alright guys, welcome back to the channel. I wanted to do another trading video following up on last week's trading video, because if you haven't watched that video already, I did a video called Good Trading versus Bad Trading, and I took two currency pairs that looked very similar and I analysed them both, and I gave you discretionary insights into why one was a high probability setup and why one wasn't. And then on the one that wasn't, I told you where the high probability setup was and what was likely to happen once we reached that high probability zone. The Aussie CAD and the Aussie dollar, they look very similar, and if you haven't watched that video, go and watch it, because you'll get a lot out of that video in terms of discretion and really what separates the professional traders from the rookie amateur traders, and how the difference is in talking yourself out of a trade rather than talking yourself into a trade. If you can find everything that's potentially wrong with a setup, you're going to have a decent time trading. You're going to generate profits over time, and not only that, it stops you from taking every trade that you see because you get a bit excited, and what that ends up happening is you end up giving your money back. Any profit you make on one, you end up giving back on the other, and you'll break even at best, but you usually end up blowing your account at some point. So go and watch that video, and in this video I want to follow up and see what happened, because if you've watched this channel for any amount of time now, you'll know that I don't really like hindsight stuff. I don't put out winning trades only and give you guys false expectations. In fact, the best traders I know have a strike rate of under 50%. So I try my best to put out trade setups that are on the radar, analyze them live so that you guys can then follow up with the trade setups after, and that's what we did last week. So if you followed that up, you'll see what happened next, but I just want to break down what happened, and I also want to share with you another little opportunity, or a couple of opportunities that are on the radar after this session. So let's get stuck in. So the Aussie CAD and the Aussie dollar were the setups that we were looking at. Okay, so if you haven't seen the video from last week, go and watch it. I explain what we were looking at, how we analyze those setups, but just to give you a quick run through, we were looking at this $1 flat level being respected, and we had the retest, we had divergence on the RSI, we had a 2618 setup, we had a triple test in the end, and with the divergence on the RSI and the major structure looking left, this looked like a good opportunity at market, which is why we were able to involve ourselves in this trade. And you can see the bears then jump out the window, we get that big roll off following that move, and we held that level. We didn't ever push any higher than that level, which is what we expected and what we predicted in that video. The next pair was the Aussie dollar, which we had a similar setup to the uninitiated trader, the rookie, but I said this has got a high probability of pushing up rather than rolling over, because this wasn't a valid retest. We actually put in a higher high, higher close, which meant that we were likely to see a push to the upside. The probability was that we were going to see a push higher, and where we were likely to go, where I said I was interested in that video, was the 0.8 level. That was the level where we had major structure looking left. We hit that level like a wall before rolling over. So exactly what I said would play out did, or what I gave you probabilities of happening did. That rolled out exactly to the textbook of how we predicted. So that just goes to show you, because I didn't pick one market, I picked two markets, and I showed you both and the probabilities in both. I shared with you my discretionary notes on both and how I would be looking to involve myself. If that doesn't prove to you that, one, we can identify these moves that happen frequently and learn to read price and learn to read these patterns that happen all the time, so there's opportunity everywhere, and two, the fact that there are ways to develop discretion so that you can be on a high probability side of the market at all times, I don't know what will. So go and watch the video if you haven't already, and then come back to this one and follow up what went on. Now, since that rollover, there's another couple of opportunities here. So one is we've rolled over, and now we've had this big bearish streak, this big bearish rollover. We've broken these support levels looking left, and what we've put in on this is what we call a compression channel. And this compression channel is a typical channel that breaks to the downside. So now if you've got a system in your trade plan that allows you to trade this setup, this is what we call a compression channel. This is how I got involved in Bitcoin both times. This is what I trade on the dollar yen. I don't trade it on this particular pair, but if you do trade it on this pair, we're pushing up to the top of that zone now, and this is where you're likely to see the break to the downside to retest these lows. Now I do know, based on my own testing, that there's about a 70% chance of hitting the lows, but in the interim on this, it's about a 50-50 chance whether we push up a little bit higher and then down, or we just roll over to the downside. So about a 70% chance of testing the lows, but 50-50 whether we push up first a little bit and then roll over, or just roll over straight away. So keep your eyes on that. But the opportunity I want to share with you today really is the dollar yen, because dollar yen, we've recently had this reversal where we broke structure, we put in a higher close, we then had a retracement, we then put in a new higher close, a retracement, and now we've had this strong bullish run, 1, 2, 3, 4, 5, 6 bullish days in a row. Obviously today's the decision point. We know that doesn't go on forever. We know we're likely to run out of steam there and see some deceleration. And if we just put in a horizontal line here and scroll back, you're going to see that this is a major level of structure. You can see that we respected it here, resistance, this nice support shelf in here. We had support here, here, and so on and so on and so on. There's probably 10 counts in just that short period of time where this level has been respected more often than not. So if you're a counter trader, you might be looking to short at that level depending on what price is doing. In my personal opinion, I would like to get long this pair, but not yet, right? We can see the exponential moving averages here. I've got the 8, 20, and 50. They're fanning out nicely, which indicates a strengthening in the trend. And we've got that bullish move. But what's likely to happen now is we're likely to see a pullback, and that's when I'll be interested in getting involved in a buying opportunity. Where will I look to get involved? Well, let's bring our horizontal line down to previous resistance, should form support. Look left, resistance, support, right, and so on and so on. This is a very strong level of structure as well. So if we get a pull down to that level, that's where I'll be looking for buying up the dollar yen. Now, of course, I'll have to wait for my entry techniques to be met and get a signaled entry, but that's the area I'll be looking for my entries. Ways that you could enter that is a retest, a double bottom on a lower time frame maybe, or a higher close, a doji, some tweezer bottoms, low test candle, free bar reversal, whatever it is that you trade here. Some of you just trade, wait for RSI to go oversold and then wait for divergence, wait for it to go back above 30 or 40 before buying. That's another strategy that's very common, but that's what we'll be looking at. In terms of taking the counter move, I'm not interested because this is horrible movement. I don't like this type of movement in price. There's no nice ebbs and flows. This isn't what I'd call an ascending channel. There's no indication of exhaustion or deceleration, so it's not something that I would look at personally. But that is what I'm looking at. Patience pays the bills. Wait for a pullback down into 106.20s, and then we can look for a buying opportunity. So that's a trading video for this week. That's what's on the radar. There's not really a lot else. A lot of the setups that we caught last week are just in the dust settling phase because they've all played out. Now we're just waiting for those decision points to be broken, or confirmation of price to go in a certain direction, and then we can start looking to get involved. So not much on the radar today, but I'll be back next Tuesday with another trading video. If you haven't watched that other video, go and watch it, then follow up with this one and you'll have your mind blown. So until next time, take care, have a great rest of your day, and I'll see you then.